Now, the part of the show that I like best, actually, and I know viewers of the show, investors like as well. We usually talk about the top three things that individual investors should focus on before they make their investment decisions. And this time, I thought it would actually be quite interesting and perhaps even new to our show that we did a top five list versus a top three. And we're actually calling it the top five things to focus on for 2025. So the top five for 25, maybe that's a catchy phrase that we can use. But here they are: central banks and interest rates. What are central banks going to do? And what they do will definitely affect markets, especially the Federal Reserve. New Trump administration policies. Trump administration will take office in January, and we're going to be talking about what their policies will be and how they will affect overall markets. They're talking about cutting taxes. They're talking about deregulating or reducing regulation. But on the flip side, they're talking about tariffs and how that will affect things. So we'll have to see what happens and how things play out. Another, I guess, point that I wanted to get across to individual investors is valuation. Stock market ends the year pretty much at all-time highs. We've seen a bit of a bumpy ride the last little while, but overall, I think the markets are pretty close to their all-time highs. And so for me, valuation will be something to look at next year. Geopolitical events, obviously, what's going on in the Middle East, a lot of it has calmed down over the last month or two, but we still know that the whole Israeli-Hamas situation could flare up at any point in time. The Russia-Ukraine situation continues to roll on, whether it's China and Taiwan, many different areas around the world. We see geopolitical events and there could be some flare-ups. Investors need to manage their expectations for 2025. I think it's quite important. And I talk about managing expectations all the time. I think where individual investors and their advisors, where that relationship goes astray, is when the investor has a different expectation than the money manager or the investment advisor. I think they need to be on the same page. And I try to communicate with my investors what I believe, and I will do this on our show today, what I believe you should be expecting in 2025 as far as returns are concerned. So let's move on with our first point, which is central banks and interest rates. And so, as I said, I think that interest rates will continue to fall. I think there is no doubt about that. The question is for us here, will we cut more than our neighbors to the south? Will we cut interest rates? Will the Bank of Canada cut interest rates more than our neighbors to the south? We've been hearing talk from the Bank of Canada and the Fed that they're going to go cautiously with respect to cutting rates next year. We're not going to see the big cuts here in our country. And in the US, they may not do as many cuts. They already cut a full 100 points, and perhaps they only do 50 just for the full year. They did 100 basis points of cuts in the US from September to December, and maybe next year they only do 50 for the full 12 months. So it's going to be important, the Fed, Bank of Canada, and really all the central banks around the world to set policy that meets not only what their economy is doing, what the markets are doing, but the expectation, right? Central banks want to see a 2% inflation rate, and they're going to continue to do whatever they need to do to meet that mandate. First chart we have here for central banks and interest rates is a rate cutting spree. And we can see here, this basically shows us what the cuts have been this past year. And you can see rate cuts. You'll see the ones at the top: UK, US, Norway. The cuts are a little bit smaller. And then when you start getting down to Canada, look how big the cut has been. They're one of the largest, or we are one of the largest cuts. We've done the most cuts, it looks like, out of all the countries on this screen. We were a lot higher to start the year, and now we've taken cuts down. And here's actually the next chart here I have is actually the chart I was alluding to earlier, which is our currency. Because of our cuts and because that our currency has been affected by the many cuts that the Bank of Canada has done versus the U.S. U.S. hasn't moved nearly as aggressive as we have. And so what has happened is we've seen our currency really fall quite a bit. And you can see the right-hand side of that chart showing a pretty steep decline. When we took this chart last week, it was a pretty steep decline for our currency. So overall, I think the central banks in North America, Bank of Canada, and the Fed in the US will continue to cut rates. But in my opinion, I think the data is going to dictate how much they cut and how fast they cut. But definitely, cuts are in the cards for 2025. I would be very surprised if we don't see any interest rate reductions at all. Let's move to our second topic, which are the Trump administration taking office in January, and what that means for us here in Canada, for Mexico, for really all countries around the world. And as I said, it's 25% tariffs are or is what the new or the president-elect has been discussing. 25% tariffs on all goods coming from Canada into the US, 25% tariffs on Mexican goods, and talking about increasing the tariffs on China as well. Our first chart here will show a pretty interesting chart. US effective tariff rate by import source and all the different countries. There it is right there. You can see the most interesting part here, in my opinion, is China is well above everybody else. And as we know, the United States has really focused on China with respect to tariffs. You look at where Trump takes office on the far left, tariffs started to spike kind of, I guess, in his a couple of years into his administration. And really from there, Biden just kept everything, maybe increased it slightly, but pretty much kept the tariff policies of the previous administration, even though President Biden said, or was actually negative on tariffs. He kept those tariffs, which is interesting. And those tariffs are still in place today. And now the president continues to talk about increasing those tariffs. Here in Canada, we've been very vocal with the United States and in the media. I know Premier Ford in Ontario has been on CNN, CNBC, newscasts in the U.S. talking about how we want to work with the Americans and we want to strengthen our borders so that the president-elect, former President Trump, or the soon to be President Trump, will not put tariffs on our goods. So a lot of back and forth between Prime Minister Trudeau, premiers like Premier Ford, and the Trump administration. Next chart we have here, the GDP impact of Trump tariffs in 2000. It looks like this was done December 6, 2024. But the interesting thing here is the global impact of tariff scenario on real GDP level. And the chart shows you 2025 and estimates for 26 and 27. And in most cases, if you look at Mexico, the effects of the tariffs will just continue to rise. In Canada, they rise and then they come down slightly. You look at China, continue to rise, and obviously Eurozone as well. So you can clearly see how much the effects will hit these countries, the Eurozone. You can see that the real impact on real GDP level goes negative. And I have to believe that that is definitely something that the United States does not want to see as well. They're also on that chart, and the effects on real GDP on the US. So will President Trump affect his own country by putting these tariffs in place? A lot of people are thinking this is just, talk and that it won't come to fruition because of that reason, but we'll have to see. Next chart we have here, which US imports from Mexico and Canada would be hit the hardest under the Trump proposed tariffs. So you can see on the far left is where the tariff rates are now or were in 2023. Obviously, the middle column shows the increase. So if it was 0.2 and now you want 25% tariffs, it's going to have to go up by 24.8. So you can see machinery, electronics, electrical machinery, transportation equipment, chemicals, fuel, metals, stone and glass, all this and many more things obviously will be affected tremendously. 2023 on the far right-hand side, you can see U.S. import value in billions of dollars. So tariffs, definitely any announcement by the administration with respect to tariffs and anything that the administration is proposing definitely is going to affect markets in 2025 if we start to see that businesses are being harmed, small businesses are being harmed because of the tariffs in Canada and even in the US, especially on those border states that are bordering with Canada, with Ontario, our province, and we know Ontario does a lot of business with the US, that will be a negative for all. So keep an eye on the commentary coming out of the Trump administration. Topic 3, valuations. First chart here shows very simply what market valuations look like as we move into 2025. PEs, S&P 500 PE ratio is at a high, and this clearly shows this. We talk about valuations on this show all the time, and I think it's something that individual investors need to focus on before you make your investment decisions in 2025. Next chart here, the S&P 500 index. You can see we've kind of come down a little bit towards the end of the year, but pretty much up from the bottom left to the top right. Next chart here is the NASDAQ, again, showing you how great of a year it has been for primarily tech stocks. And, for me, it has, it's been I guess, tech stocks have continued to lead this market, even when people were calling into question the Mag 7, the 7 largest names out there, mostly technology names. I was still saying, and I still maintain, you need to own some of those Mag 7 stocks. So the Googles, the Amazons, the Microsofts, the Apples of the world, Meta. These are the names that I think you need to look at for a growth portfolio. Some are higher value than others. Some still represent good value, and you need to do your homework to figure out which stocks those are. So I think that, yes, we're coming into 2025. Valuations are high, but I think there are still a number of ideas out there that can be bought on the cheap that still work for investors. So valuations, market valuations, something to consider when you make your investment decisions in 2025. The next topic that I wanted to touch on here, which is one of geopolitical events, right? We have a lot of geopolitical events that have affected the markets in the past, tensions in the Middle East, Russia-Ukraine situation, and one that we talk about in the investment world probably more so than the media picks up on, which is that whole China-Taiwan situation. We know that many chip makers, Taiwan Semiconductor, the biggest global chip maker, is in Taiwan, obviously domiciled in Taiwan. And if China were to attack or try to take over Taiwan, this could be a big problem for the rest of the world. So geopolitical events, definitely something that that continue to weigh on everybody, and the hope that 2025 will be more of a peaceful year with less tension. Our one chart for this I guess topic and is one of a global backdrop, and you can see that as tensions, geopolitical risks rise, trade restrictions definitely rise with it. So you don't get as much flow of goods out of certain parts of the world. I mean, we've seen Houthi rebels in and around Africa blocking a lot of trade, vessels carrying, shipping goods, being attacked by the Houthi rebels, as an example, causing some issues for supply chains. And supply chains are definitely affected by geopolitical events, and not to mention other things can affect supply chains as well. But geopolitical events is something that you want to just keep, I guess, in the back of your mind, that if they do flare up, it can cause some issues for the market. They tend to be short-lived, but something to consider. Last but not least on our list today is managing your expectations for next year. And I say this because, we've had 2 years now in a row of fantastic markets. If you're coming into 2025 thinking we're going to see another 25% growth, for example, I think you might be in for some disappointment. I don't believe it's going to be a negative year, but I'm looking more towards some more normalized returns. Keep in mind, U.S. markets on average, S&P averages in and around 8-9% a year, TSX 7-8% a year. So I think you should expect returns in and around that level, maybe a little bit higher, maybe 10-11%. But I think that is a reasonable expectation. First chart here, investor expectations for interest rates compared to reality. You can see here that as the Fed funds rate moves around, expectations move around with it. So as Fed funds rate or interest rates move higher, expectations kind of level off and move lower. And as expectations, or the Fed funds rate, I should say, starts to come down, the expectation starts to move up. And that's really what you can get out of this. And you can see on the far right that expectations as interest rates have gone higher, the expectation actually was to see a recession, which we never actually had in the US. Next chart, S&P 500 historical annual returns. You can see how good the annual returns have been. The only, I guess, the one blip in the last, let's call it 6 years or so, was 2022, a big down year, which set us up for 2 great years in 23 and 2024. So expectations are, for me, as I've said, that we will see gains, but not as many gains, or not as much of a gain next year. I think if you come in with that expectation, if we see more gains, if the markets turn positive based on the Trump administration cutting taxes and deregulating, maybe Bank of Canada doesn't lower interest rates as much or as quickly, the dollar gains some strength, maybe we see our administration here, our prime minister here, cut taxes here in Canada to compete with the US. I know there's been a lot of talk about that. A lot of things can spur on growth, but I think if you have the right expectations, to me, that is what's most important.